but they're saying that going forward, we will focus on driving strong sales growth and continue to invest in multiple initiatives and solutions. We also have Abneesh Roy joining us to talk to us about the earnings and what he makes of it. Abneesh, hi, good to be speaking with you. I think overall this is a decent set that the company has reported a 12% volume growth. There's a beat when it comes to profitability. However, top line is a bit on the weaker side.
So three, four key things. Of course, company had taken around 1 or 2% price cut because they were having much higher gross margins and EBITDA margin. And normally, paint companies operate in a band of margins. That's why slight miss in terms of sales is there. But if I see what are the good things in the results, 12% volume growth is a good number. Currently, there is a all around slowdown in consumption. So to that extent, 12% volume growth is a good number. But what has helped Asian Paint is the good festival season. Last year, festival season was quite weak because the monsoon end and Diwali, there was very little time of just 2 weeks, which is very less. This time there was enough gap. Plus the marriage season was also very strong. Almost 35 lakh weddings were there. Margins also was quite strong. It is clearly ahead of expectation with 400 bips kind of an improvement. So overall, good set of numbers and mostly 12% volume growth, slightly ahead of our and street expectation of around 11% kind of number. So the only slight miss in sales is just 1%. And in our view, that's also because the company had taken around 2% kind of a price cut, given the stronger margin. So we are positive on the company, but we'll watch out for Grasim's entry in the next 2 months, which is going to be a key monitorable for the sector.
They've actually, set out a guidance that they did earlier that they are going to see low double-digit guidance, and that's exactly what they've delivered. Abneesh, hi, what's been your take on the numbers with the 12% volume picture that they've posted? Yes, it's been a slight miss on the top line, but the PAT has been higher than street estimates.
Yeah, see, there's a beat on the margins clearly, and the volumes are also, say, a percentage higher than what we anticipated. But definitely, I think a lot of this volume growth has come back at the expense of your, you can say, the realizations, because the realizations definitely, they seem to be under pressure, maybe due to mix or maybe because of the reasons that they wanted to keep the prices competitive. And I think post the festival season, there has been an incremental 1% price cut. I think numbers, if you look broadly, there is nothing, I would say, negative in the numbers on the volume front, on the margins front. So the numbers are absolutely, I would say, fine in that respect.
Abneesh, coming back to you, Abneesh, coming back to you, what then explains the dip that we are seeing in the stock price? Do you think there's something else which is also worrying the street a bit? And any initial sense as to what you will be doing with your estimates?
So yes, today is a very, very tough day for market. So if you see, everything is red only. So to that extent, that I think is the key reason. Apart from that, of course, now results are done, and so market would like to see what's happening on the Grasim entry. Otherwise, if you see, results are absolutely okay. There's no problem in terms of results. Results are good, but it's mostly in line with expectation. At the sales and volume front, if you see 1% plus minus, at the EBITDA front, things are much better than expectation. Margins much better than expectation. So yes, that's a good number. But markets are very, very tough today. Most of the indices are quite weak. The index is 2% lower overall index. Plus now Grasim entry is a key monitorable. In terms of estimate, as I said, sales and volumes are in line and EBITDA is ahead. So we'll see on that front. Going ahead in FY25, we see as of now raw material not being a concern because titanium dioxide and crude both are absolutely in control or benign, because global there is a slowdown, there is a recession. So the supply demand clearly is in favor of Asian Paint from a raw material perspective. So we are positive in the stock, but today clearly the markets are overall quite weak.
Reworking your price targets, would you, on Asian Paints after the numbers?
So it's a function of the EPS, etc. As of now, we don't see a big change to that. So we are positive on the company from a 1 year perspective. So we'll wait for the call, which is at 5 p.m. to get more clarity on the growth assumptions which company is expecting. There is a slowdown overall in terms of the consumption. So we'll wait for that. Q3, of course, because of the wedding season and because of the full festival benefit, the 12% volume growth has to be seen in context of that. But we are already building most of the slowdown in our numbers. But we'll wait for the call to get more clarity.
Abneesh, what's the Prabhudas Leeladhar house call post the numbers?
You see, the numbers practically they don't call for any big change as far as estimates or rating is concerned. And we are positive on the company per se. It's a survivor, it's a market leader. But having said that, Asian Paints is perhaps one of the most expensive paint stocks, not only in India but globally. So when the stock is trading, say, I think it's close to 50 times on FY26 earnings. So in the context of Grasim's entry into, you can say, the decorative paint business and the kind of P multiple stock is trading at, because I think currently it would be, say, 50 plus on FY26. So I think that makes the upside capped at least for the near to medium term. So while in the long term, you can say it can give you returns, in the near term, I'm very doubtful whether the stock will give any meaningful returns from the current levels.
Expecting meaningful returns. On that note, gentlemen, we let you go. The market mood continues to be a spoil sport because we have broken below the mark of 21,600 now. So an important mark being broken on the Nifty.